Something big just happened in the crypto market that doesn't always get the spotlight, but when it does, it marks a turning point in the entire cycle. Bitcoin's dominance has fallen to 57%. For anyone new, Bitcoin dominance is the measure of how much of the total crypto market cap is made up by Bitcoin alone. When dominance is high, it means people are hiding in the relative safety of Bitcoin. But when it starts to slip, when it breaks under that 60% level, it means capital is rotating into altcoins. And that is the signal every cycle veteran watches for, because it almost always marks the start of alt season. Ethereum is already up almost 19% in the last month. Solana has climbed more than 15%. The entire altcoin market cap has expanded by around $400 billion since July, pushing the total to nearly $1.8 trillion. That's not bots trading against each other. That's not retail frenzy. That's serious capital moving out of Bitcoin and into higher beta assets. And that rotation is how crypto markets flip gears from slow, grinding climbs into explosive, multi-month runs where altcoins can outperform Bitcoin 3-to-1 or more. So why is it happening now? The answer is partly in the charts, but mostly in the macro. Jerome Powell and the Federal Reserve have changed the mood. Just weeks ago, the story was higher for longer. Now the prediction markets are saying there's an 87% chance of a September rate cut. That's a massive psychological shift. Liquidity tightening keeps risk assets cautious. Liquidity easing pours fuel on speculation. You can see it everywhere. US equities have pushed to fresh highs. Bitcoin ripped through 116,000 after Powell's Jackson Hole comments. Ethereum reclaimed levels we haven't seen since 2021. And now altcoins are catching the bid because the story of risk on is back. And here's the beauty and the danger of this market. Crypto doesn't wait. It doesn't pause to digest. The moment macro conditions turn favorable, money floods down the risk curve. Bitcoin is the first stop, but once that rally stabilizes, the real action begins in altcoins. That's exactly what we're seeing now. But let's slow this down and unpack why Bitcoin dominance even matters in the first place, because it's not just a number, it's a measure of confidence. When dominance is rising, it tells you investors are cautious. They're clustering around the asset with the deepest liquidity and the longest track record. They're effectively saying, I want crypto exposure, but I don't want risk. But when dominance falls, it signals the opposite. It says traders and institutions are confident enough to stretch out along the risk curve. They're saying, I'll take more volatility, I'll take more narrative risk, because I believe the upside justifies it. That's why the drop to 57% is a big deal. It's not just Bitcoin losing share, it's confidence spreading. Look back at past cycles and you see the same rhythm. In 2017, Bitcoin dominance fell under 60%, and within months, Ethereum, Ripple, and a host of altcoins had delivered tenfold returns. In 2021, dominance slipped again, and Solana, Avalanche, and meme coins like Doge and Shiba went on massive runs. The pattern doesn't repeat perfectly, but it rhymes. Bitcoin rallies first, then it cools, then altcoins catch the wave. The trigger is always the same, dominance breaking down. That's where we are right now. So let's talk about the altcoins that are already leading. Ethereum is the first name on the list. With ETFs now open in the US, Ethereum isn't just a crypto asset anymore, it's an institutional product. It's staking yield locked into contracts. It's real DeFi usage surging again. It's a platform for tokenized treasuries, stablecoins, and RWAs. When capital rotates into altcoins, ETH is the natural first stop because it carries legitimacy and liquidity. That's why it has grown to more than 14% dominance on its own, even as Bitcoin slips. Then there's Solana, the high beta bet for anyone who wants more torque. In August alone, it jumped 15%. But the story is about more than price. Solana's DeFi ecosystem has been rebuilding. NFT volume is climbing, and institutions are beginning to look at it as more than a speculative chain. Every cycle needs a rocket, and right now Solana is playing that role. But this isn't just about individual coins, it's about categories. Layer 2s like Arbitrum and Optimism are exploding with activity. Transaction counts are hitting record highs. DeFi protocols are waking up again. RWAs are being tokenized and moved on-chain. Meme coins are waiting in the wings, because every alt season eventually spills into pure speculation. The structure is playing out exactly the way it always does. Majors first, then the rest. Now, we can't ignore the role of psychology here. Data from Santiment shows that social chatter about the Fed, about rate cuts, and about crypto rallies has hit an 11-month high. That's a double-edged sword. On one hand, it means the narrative is alive, and narrative is what powers flows. On the other hand, when chatter spikes this high, it can be a warning of short-term tops. Too much euphoria, too fast, often leads to corrections. That doesn't mean the cycle is over. It just means volatility is guaranteed. So how do you read this moment? Bitcoin dominance under 60% is the trigger. Ethereum outperforming Bitcoin is the confirmation. Altcoin market cap swelling by hundreds of billions is the proof. And a dovish Fed is the fuel. Put those together, and you get the textbook conditions for alt season. But here's where it gets more interesting. This isn't just another copy-paste cycle. Something new is happening underneath. For the first time, we're seeing real-world assets like US Treasuries tokenized at scale. BlackRock's Boodle product alone is billions deep and already being accepted as collateral on some exchanges. Franklin Templeton, Ondo, and others are competing for the same market. That means the base layer of crypto is no longer just stablecoins and speculation. It's now sovereign debt earning 5% yield, moving at crypto speed. That structural change could make this alt season very different from the last ones. It gives institutional money more comfort. It gives DeFi a new source of collateral. And it makes the whole ecosystem feel more legitimate. So what does this mean for traders? It means opportunity, but it also means traps. Alt seasons are the most profitable phases of a crypto cycle, but they're also the most brutal. Coins double, triple, even 10x, but they also crash 50% in days. Narratives flip on a tweet. Liquidity dries up the moment sentiment shifts. If you're not disciplined, if you don't take profits, alt season can hurt as much as it helps. That's why risk management matters. Don't treat this as a free lunch. Treat it as what it is, a period of higher opportunity and higher danger. If you're playing it, know your levels, know your exit plans, and don't believe every headline. Because while Bitcoin dominance at 57% is a screaming signal, it's not a guarantee of smooth sailing. And let's wrap this all together. Bitcoin's grip is loosening. Altcoins are surging. The Fed is turning dovish. Social sentiment is euphoric. Real-world assets are wiring into crypto. The rotation is on. This is alt season starting to unfold, and it could be one of the biggest we've seen yet. But remember, these moments are double-edged. They create life-changing opportunities, but they demand discipline. Don't leave your crypto sitting on exchanges. Get a Ledger hardware wallet and secure your keys. The link is in the description. Make sure you're following us on Spotify for the next breakdown. And as always, we will see you at the top.